Financials are on the brink of a critical shift, down 0.27% this week. A looming rate decision poses significant risk. This is what every serious investor needs to know about financials right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. As we begin this week of May 18th to May 22nd, 2026, the overall market context is one of normal conditions, with the VIX at 18.4, indicating a relatively stable environment. In this context, the financial sector is worth examining closely, particularly as it has been tracking slightly below the S&P 500 this week. The sector ETF, XLF, has seen a minor decline of 0.27%, which may indicate a pause in the sector's momentum. Despite this, the financial sector deserves attention right now, given its significant influence on the broader market and its potential to drive growth. With interest rates and economic indicators in flux, understanding the dynamics at play in the financial sector is crucial for investors seeking to navigate the current market landscape. This week, we will delve into the sector's performance, examining key trends and factors that could shape its future. Let us start with the technical picture and what the charts are telling us. The financial sector, as tracked by the ETF XLF, has been witnessing a period of consolidation, with a weekly change of minus 0.27% and a monthly change of minus 1.79%. The Relative Strength Index, or RSI, is currently at 42, which implies a neutral signal, suggesting that the sector is not experiencing overbought or oversold conditions. This reading indicates that the momentum is relatively balanced, with neither the bulls nor the bears having a significant upper hand. The trend direction is somewhat uncertain, lacking clear conviction, as the sector has been oscillating within a range. Key support and resistance levels likely exist around recent highs and lows, and it is essential to monitor these levels for potential breakouts or breakdowns. The current move does not appear to be a sustainable breakout, but rather an extended overreach, and a pullback to test support levels is possible. This week, a technical setup worth watching is the potential for a retest of the lower end of the recent range, which could lead to a consolidation phase. Now let us look at the fundamental catalysts driving this sector. As we look at the financial sector for the week of May 18th to May 22nd, 2026, we have several fundamental drivers at play. The macro environment is providing a tailwind, with normal conditions prevailing in the VIX at 18.4, indicating a relatively stable market. The key stocks in this sector, such as JPM, BSEGS, WFC, and Berkshire Hathaway New, are signaling a healthy sector, with valuation multiples holding up well. This week, we will be watching the PCE inflation data closely, as it could have implications for interest rates and subsequently, the financial sector. In terms of earnings reports, we do not have any major releases from the key players, but we are seeing some positive trends in the fintech space, which could be a driver of growth for the sector. On the regulatory front, there are no major developments that could impact the sector. The longer-term fundamental thesis for being positioned in the financial sector remains intact, with the potential for rising interest rates and a growing economy providing a supportive backdrop. The sector's diversified business models, with a mix of banking, insurance, and asset management, also provide a degree of resilience. Next, let us talk about the specific risks you need to manage this week. The financial sector is facing heightened risks this week, primarily due to regulatory uncertainty, geopolitical tensions, and potential interest rate volatility. These factors could lead to increased market turbulence, affecting investor confidence. Given the current volatility environment, with the VIX at 18.4, investors should be cautious with position sizing, balancing potential upside with downside protection. Unexpected headwinds, such as a surprise rate hike or unforeseen global events, could further exacerbate risks. To manage downside exposure, a disciplined framework is essential, incorporating stop-loss orders, diversification, and regular portfolio rebalancing. By adopting a proactive approach to risk management, investors can navigate the current landscape with greater confidence. This is educational content, not financial advice, and it is crucial to consider individual circumstances before making investment decisions. And now for the strategic outlook, where does financials stand heading into next week? Our strategic positioning for financials this week remains bullish, driven by robust loan growth and improving net interest margins. Investors should track the theme of rising interest rates and its impact on bank profitability. This is educational content and not financial advice. For more insights, like and subscribe to Financial Market Oracle, and comment your financials watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.